Alright, so do you want a price action strategy with the trend trading and very simple using one moving average? Then this video is for you. And whenever I ask you guys on YouTube or wherever what you want to learn about, it is about trading strategies and price action. So here we go. A very simple approach to price and trend trading. So what I use is a 50 period moving average, which you can see here. This is right now the 4-hour time frame, but we're also going to take a look at the 1 hour and the daily. So this concept works everywhere. And what I do is that I use the moving average to tell me, all right, in which market direction are we going to trade? When the price is above the moving average, then I will look for buying opportunities. When the price is below the moving average, I will look for selling opportunities. And I've talked about the market dynamics in many videos previously, and obviously the market never goes in just one straight line to your target, and the market always follows those waves, and it's always going this wave rhythm. So we're going to use that to trade in the trend, and we're going to look for pullback opportunities. What are pullbacks? So when the market is going higher, you can see that we have impulsive waves, which are waves into the trend direction, and we have waves against the trend direction, which are corrective waves. So impulsive and corrective here. And what we're going to do is we're going to time our trades so that we can get at the lowest point of the correction waves, because obviously if we want to get into a buying opportunity, what is the best place to buy? When price is at the lowest. And where's the price at the lowest? At those turning points when a correction wave turns into an impulsive wave. So that is essentially what pullback trading is all about. So we are looking here at an uptrend, and what we're going to do is we wait for the market to establish sideways consolidations, and then what we are doing is we just draw our support and resistance around the highs. So you can see here is a sideways consolidation. Here's the highest high point. You can see we have a resistance level. Then we simply wait for the market to break out of it and then come back to it. Ideally, you would like to see the pullback into the moving average, which also is then an intersection with the previous support and resistance. Those are the highest probability trading opportunities where the previous high point intersects with the moving average. And by the way, I have compiled 2 new trading courses which are linked underneath the video. They are really affordable. It's a step-by-step process, and I will show you how to do a multi-time frame approach with entries, exits, stops, targets, trade management, and all of that stuff. So make sure to check the link in the description below the video. But what we're going to look for now is after the breakout, we wait for the market to come back into the area here, and then we are looking for a deceleration pattern. What is deceleration? Deceleration is when, let's assume the market is moving lower, then what often happens is that the candles are losing or are just slowing down, which means they're getting smaller and smaller. And this is deceleration, when essentially the market is just rounding off and it's losing momentum. You can clearly see that the candle sizes are getting smaller and smaller and smaller, which basically means that the selling pressure, the selling power behind this move is weakening, and less people are willing to sell, because obviously the lower the market gets, the less attractive it is for the people to sell, and the more attractive it is for people to buy. Once again, this is how supply and demand works in every market, obviously. And then what you want to do is you wait for the market to reach this area. And very important, just because the market reaches this area, it's not good enough to just blindly buy, because that is not going to work. You need to wait for the market to slow down. You can see very large candles suddenly turn into very small doji candles, and then you have an acceleration away. So around here, this is where we then go to the lower time frame to time our trades. But this is just the first introduction on how you can understand the market rhythm, how you look at momentum structure. And it's a very effective way, because this happens all the time in trading. And whether you look at Forex, stocks or indices, cryptos, you will see this pattern. You will see a breakout, a pullback, the market is slowing down around here. You can see we have multiple pin bars. We have here a very big engulfing candle as well. And then this is the best price to buy, obviously, because the best price to buy is not only in trading, it is when the price is at the lowest. And the lower the prices get, the more attractive it becomes for people to buy, the less attractive it is for people to sell. And this is how deceleration and acceleration is visualized in trading. And you can see we always want to look for those consolidations. Where is a trend stalling? Where is accumulation and distribution going on? You will often see a breakout and then a retest into this area. So you can see here the market is perfectly pulling back into this area once again, decelerating. Large bearish candles are slowly turning small, and then a trend continuation happens. And this happens in both directions, up and down. You can see the market sold off, came back, gave you this retest pattern here at the moving average. Large bullish candles turn into smaller and smaller and smaller candles until you have a complete turnaround. And this happens all the time. You can see break and retest, and it's a very, very universal concept. So here we are on the daily chart. Before we are on the 4 hour, I will also take a look at the 1 hour in a moment. And here you can see this is how new trends often start. So the market is coming from a very long downtrend, and then it's breaking above the moving average, trading back into it. It is decelerating. So when we look at wave analysis, this is wave 1, wave 2, and then we want to trade in wave 3, which is the highest probability wave. You have deceleration, you have a retest here, and then you go to the lower time frame to time your trades. Very simple, however, very effective. Here, now let's take a look at a 1 hour time frame, and we can obviously here we can see obviously that the market has turned bullish after this moving average has been broken. You could also go to a higher time frame to just confirm, okay, in what market are we actually? We are clearly in a buyer's market here. We have temporary consolidations here, which is quite normal, but overall, no doubt, we are in a bullish market phase. We have a flag here, which is important for us as well. So this is a higher time frame analysis. We can even go to the daily time frame to confirm, all right, we are clearly, obviously, no question asked, in an overall uptrend. And then we want to trade the 1 hour time frame. And what we want to do is wait for breakout and pullback options. And here is our highest high point during this flag. This is the flag that we drew, or I drew on the higher time frame. Great flag, breakout here above the highs. Then the pullback. The pullback occurs right at the intersection of the highest high of the flag and also the moving average, pin bar, almost an engulfing bar, and then this is where, this is where you then have the follow through. So again, you are entering at the lowest point, or almost at the lowest point of a correction wave, and then very early on into a new trend following wave. So highest probability, highest reward to risk ratio, and you're trading with the trend. All right, let's take a look at another example. So the market broke below the moving average here, started trending, and we can clearly see that the market is in a trending phase. Whenever you see something like that, you just stay away because you don't trade, or I don't trade in ranges, and I wait for the market to establish a clear phase. Then I wait for the market to come back to the moving average. I see, okay, does it fall into a place where there's a previous support? Yes, it is. And you can see here we have a deceleration. Green candles are getting smaller and smaller. We can even go to a lower time frame to check, oh, how does it look here? Even, we may be even able to get in some type of trend line. We have a flip zone. We have some type of pattern in here. And then you could start looking for timing your entries, but this is topic for another video. Or if you're interested in learning the course step by step, make sure to check the link in the video description, below. And now you can see this is a universal rhythm, because behind every price and trend wave, there are buyers and sellers interacting. And the way the buyers and the sellers interact is visualized by trend waves. The market goes down, people sell until it is so low that it's not reasonable to sell anymore, and it's so lucrative to buy. People buy until it's so high that it's interesting to sell again. Then people sell until it's so low that it's interesting to buy once again. And it's always this ebb and flow of the market forces. And this is why the market moves in those waves. And then you can see this is a very universal concept. You can see that retest of the moving average, retest of the previous lows, and rejections, breakouts, moves back, and so on and so forth. So I hope you enjoyed this video. I hope you got something out of it. If you did, leave a sub, leave a comment, leave a like, and yeah, don't forget to check the links. I will see you in the next video. if you're subscribing. So see you soon.